So today is February 16th. It's 8:19 Eastern Time. I'll turn this other audio off here so it doesn't get picked up. Okay, so what we're watching for are two kinds of setups. We're watching for punctures and we're watching for straight on trend entries. Now, the two entries both have meaningful backstories. Both of them are setups that involve an understanding of behavior patterns. So for example, the clearest one to see this morning at 7:51, we're expecting a selling pressure signal. The trend is down, we're below the moving average. This is an opportunity to see if the market will begin a leg down in a downtrend. This blue line is here because behaviorally, enough times in the past recently, the banks have pushed price down at 7:51. So there's an alignment of two conditions. There's an alignment of time and there's an alignment of trend. The trend is moving down, we're supposed to go down lower. So 7:51 represents a potential entry point. Now, we get into the subtleties of it. I prefer a close of candle entry. Up above, I've got a marker. That marker is designed in the software to be at a certain distance from the high or the low of the candle. In this case, it's 3 ticks away from the high. So I prefer a stop above that line. It gives me a visual representation of an area where I think price should push away from. Meaning, if it's going to go down, it shouldn't go up past the high and then go down. The move should start now. In terms of targeting, once I know my stop and I have my entry, I can deploy a 2-to-1 risk-reward ratio minimally. So down here, if I'm entering at 68.35.36 and my risk is here, we know from listening to traders who've been trading for a long time that a trend system averages out, whatever trend system you're using, somewhere in the 45 to 50% range. 50% with a trend entry, you're killing it. But those traders are using and deploying minimally 1.5 to 3 to 1 risk reward ratios. So here we're encouraging people to hold it until this 1.5 to 2.0 risk reward area. So think about what that does psychologically. Number one, I know when the trades are coming to the second. I can time them and count down like a rocket launch. 3, 2, 1. Put my order on the candle. The empowering sense of knowing when a trade is coming is paramount as opposed to reacting in the market every second. You're reacting and being a part of someone else's plan as opposed to being proactive and having all those things prepared. Your risk reward tolerances, your max risk tolerance, your minimum risk tolerance, all of those things are on your terms, right? So as we come down into this 1.5 area, we're moving our risk now, our stop, 1 tick beyond our entry price. We go to a break-even plus condition. And this is another element of the trading systems that I've uncovered working with traders who've been doing this for 5, 10, 15 years. They all have an element, or on the majority, overwhelmingly, have an element of trade protection. They don't allow a winner to turn into a loser. Okay, so we're going to talk about that and demonstrate those potentials here this morning. Okay, and then obviously the exit at the 200% mark. So we hit that by 8:01 this morning. Game over. Okay, so the next signal is at 8:03. Take our fibs off, we'll take our arrows off. And then the whole process starts over again. At 8:03, we have an alignment of trend and time. The market is moving down. This is a time we anticipate the market to move down even lower. So now at 8:03, we're in control. We have an entry at the close of the candle. We have a stop one tick above the marker line that we've put in place, which is just above the candle. And so you see here you have a much smaller target, right? And in that case, you enter at the close of the candle and you hold it to your 200% mark. Not a very large trade, but there it is. Okay. Now, we come into the next area. 8:12 is the next signal. 8:12 is a signal in the direction of the trend, right? We employ those same techniques. We put our stop one tick above the marker. We enter at the close of the candle. Third time in a row this morning. The market pushes down, doesn't hit our break even, comes all the way back up to the entry, comes all the way back down, hits our break even, comes all the way back up, doesn't hit break even +1, and then finally drops down to the 200% mark on the target. So 3 setups this morning in the down direction that are completing their 2-to-1 risk-reward ratios. At 7:45, this is an example of a stop loss. The market doesn't go to its 200% and hits its stop there just below the line. Okay? Those are examples of pure trend entries. Entries where time and trend align. Now, moving forward, look, the benefit of the software that you've got is that we already have the times now out into the future. We're waiting for these conditions. If the trend is down, Jack, we're waiting for the next down times, which would be 8:28, 8:48, and 9:11. If that is the only element of your trading system that you're deploying, that's your setup, there are 3 opportunities for you. You tell yourself, you tell your mind, hey, there is no over trading. I have 3 opportunities. When you tell yourself going into that, knowing going into the situation what you're going to do, that's all you can do. Okay, so let's talk about the alternate entry, or what I refer to as the puncture entries. Okay? Okay. Over here at 7:58 and 8:07 and 8:19, these are counter trend times. These are important. And they also have a foundational underlayment. They have a backstory that we can leverage. These are times where the market is supposed to go up, or we're supposed to see some kind of resistance at that time. And so if the market falls, it means the banks have withdrawn all the buyers. They've pulled them away. We would expect at 7:56 the market to go sideways and potentially push up. But John, if it falls, and in this case, if it touches or punctures the line, I'm looking for a short opportunity, because it means the buyers that we were expecting at 7:58, the algorithms, the buying programs, the banks have withdrawn those resources. They're not here. The trend is down. We as trend traders want conditions that are favorable to entering a trend. What condition could be more favorable than knowing there's no buying resistance? Okay? So at 7:58, we're looking for a puncture or a touch of that line. And we get it right there. So in the NQ or YM or Dow, or rather the CL, I have a minimum 5-tick risk, which would be 36.25 above the high of the puncture candle. So 35.50, 36.50, 36.75 would be my stop. Minimum 5 ticks of risk, right? And the risk is always above the puncture candle. So this is a very tiny entry right here. We're looking at a 10 tick or a 2.5 point NQ drop. But that becomes a valid short entry right here. At 8:07 it comes down, doesn't touch it because the 8:12 signal becomes the new trend entry. Now we'll look over here at 8:19. We're expecting a repulsion. We're expecting consolidation and a move away. So now on the 8:19 signal, this becomes a valid puncture entry. This becomes a valid puncture entry. So now at 8:19, the line is at 8:24.50. We're watching for a puncture. We get that puncture right here. So now, pursuant to what we learned with the trend entry, our stop is 1 tick above the puncture candle, 25. We're looking for an impulse move down, a run into the stops and beyond. Okay, so right here. Enter at the puncture, your stop is right here. And now your money management kicks in. We're looking for a 2-to-1 risk-reward ratio. Your exit is down below at 68.21. Okay, so here's that econ that we were worrying about. If you're a time warp user with your patterns on, you saw that 828 was a pattern 4 and a pattern 6. Both of those are reversal patterns right here. So you would have avoided this trade as a trend entry and looked, if anything, as a counter trend trader for a reversal. Econ's market tends to invert at these times. So those are 2 examples of trend entries that we'll be watching for over the course of this live room. Does anybody have any questions about those, or did that not make sense to anybody? Okay, so watch for those trend entries over the course of the session here today. We're past the econ at 8:30. We'll be watching for those now across the broad spectrum of markets. We'll be looking on the Dow, the gold, the ES, CL, NQ, as well as the DAX, which just had a puncture entry. Ooh. Good job, everyone.